Hi, and welcome back to yet another exciting episode of Smart and Secure Investing, brought to you by Treasury Uganda Limited. Today's topic is really exciting, and it's targeting Ugandans who already have bonds, and you're looking to sell your bond or you're looking to invest it somewhere else. So, today with me again is Francis. Francis is a financial expert, has understood bonds and how Treasury bills and bonds operate. And so I thought he was the right person to actually tell us about the secondary market. Welcome again, Francis.
Yeah, thanks, Edina.
Yeah, so to start you off, just tell us, what is the secondary market? What's that term? And yeah.
Well, first of all, thanks for having me again. And before we go to secondary market, I will first introduce the primary market.
Oh, there are two types of
yeah,
markets.
because I hope before you went to secondary,
you went to primary.
You first, you first did primary. But unfortunately, we don't have tertiary.
Okay. Okay.
Yeah. So first of all, I'll start with primary market. In bond trading or in bond investment, we use two terms. Someone can buy from primary market, another one can buy from secondary market. So primary market, it's specifically bonds are issued by an issuer, who is Bank of Uganda. So if I get a bond direct from the issuer, I am an investor, Bank of Uganda is an issuer. So if I get a bond from the issuer, that means I am getting it on primary market. That's what we call auction.
Okay.
Yes, this is where you, after opening an account with the issuer, who's Bank of Uganda, you fill in what we call an auction form, which is the bid. You put in your bid, which you submit to the issuer, saying, reading maybe 200 million, you're bidding to get 200 million. And then the issuer receives reviews. So before we proceed, after submitting your bid, there are two different types of bids. I explained the same in the previous episode. We have competitive and non-competitive.
Non-competitive, yeah.
If your bid is above 200 million, it's competitive.
Yeah.
Meaning it's open to discussion by the issuer. So issuer can decide to drop or to take it, depending on the economic factors involved.
And the
the
absorption,
demand and supply.
It's called what? You called it what last time? The absorption capacity of the bank?
Yeah, it all depends on the appetite of the issuer. Because if the issuer needs a lot of money, he will accept as many bids as possible.
Yeah.
If the issuer needs, let's say, is expecting to correct, let's say 100 billion, and amount submitted is 50 billion. That means it's below the target. So it's likely to take all the bids, accept.
Yeah.
So whereas non-competitive, they are accepted automatically but they only depend on the pricing of non-competitive. So what comes out of non-competitive,
the total in the
like as in the price to allocate, is what will be considered for non-competitive. Yes. So non-competitive, you submit it with a price where you want to buy it from a bond.
Yeah.
Yes. Whereas non-competitive, you submit and you only wait because it's accepted automatically. You only wait for what comes out of the allocation committee, which is now under Ministry of Finance and Bank of Uganda.
Yeah.
Yes. So that's primary market. Primary market. You're getting a bond direct from the issuer.
Yeah.
Yes. So the secondary market, it's between an investor to an investor. So Francis went into primary market, got a bond. Edna did not get a bond. Maybe by that time you didn't have the money. So here it's between an investor to an investor. I will now sell to you the bond I acquired from the issuer during primary market. Yes. So now you're reselling what you acquired.
You're reselling, yeah.
For you now, you're buying what someone acquired.
So you're buying from the secondary market.
Yes, you're buying from the secondary market. So specifically, you're getting what was already issued some time back, and it's so important that you do not have to wait for Bank of Uganda to again reopen another auction. Just imagine, because bond auction is once a month. So just imagine you have your money and you have to wait for another month to invest. Implying, because remember bonds are under day count, because the interest is compounding. It's every day. Yeah. So if you're waiting for other 30 days for you to again invest, which means you're losing money as an investor. Your 30 days, if you put it on the calc and see how much you've lost, it would be better now you buy it on the secondary market and you now get the bond, and you don't need to wait for Bank of Uganda to reopen the bidding. Yes, so it's a matter of like you've not bought it direct from the issuer, but you got it from Francis, who wanted money and maybe was going to invest in other ventures like real estate or otherwise. But investor to investor, secondary market. Issuer to investor, primary market. Yeah. But the two, they have their own advantages and disadvantages.
Wow. Yes. Before we go to advantages and disadvantages, why would someone want to sell their bond before maturity? Because when you buy a bond, it's really exciting. What is exciting to you is the interest you're going to accrue after a period of time. So why would me, who has bought my bond from the primary market, now consider selling it in the secondary market?
Well, in the previous episode, I defined bonds as liquid assets, whereby it's like you have your money, like you're seeing your money. Anytime you need your money, you will get it. So most people, instead of leaving cash on the account, which of course is being, let's say, used by maybe
banks,
a bank, because at the end of the day, also these banks do not allow cash to be idle. They have their daily threshold. So if the bank has deposits idle on their, let's say, Nostro account or their suspense account, of course, every bank has an investment arm, like that's Treasury. That money must be invested. So for the money to be invested, they have to buy a bond. So they will contact people who are willing to buy, to sell their bonds, and now they will come and they will use your deposits on your account. Yeah, I don't want to go into details of how they will access your account, but because your account is domiciled at their bank, and your account balance you see is just a mirror of what is reflecting on their suspense. So your money is specifically on their account. You have a reflection of what you have, which means they now have the capacity to invest your money. They generate revenue, which of course, that's their business.
That's how banks make money.
Yes, that's how banks make money.
Yeah.
So other guys are like, no, for me, I will not allow cash to be idle on my account. I'll proceed and go to Treasury One, ask them, I have cash, I need to invest, which is the right bond to invest into. So, shall advise you, this is the right bond whereby anytime you're selling, even it's on demand, buy, invest, and then you keep on earning interest. Why someone may want to sell their bonds? One, there are different reasons. Why would you go to the ATM to withdraw cash? Why?
To pay bills, to...
Exactly. Yes, to pay bills, maybe... Yeah, it's a weekend, you have a birthday for your girlfriend, you want to take your parents for a vacation. Because this is your money. A bond is your money. No one is putting terms and conditions on how you will spend, because it's liquid. It's an asset, but liquid. The only way you can access your asset is by either selling it, because it's not like land whereby you'll go and set up projects. You're just saving cash. It's not like land you'll put poultry or any other project, no. The only way to access it or to enjoy it and stuff, either by selling it, you can liquidate part of it. That's a good thing. If you have 200 million, you can pull out 2 million for a weekend. Maybe you've been saving for a wedding. You've been saving, because every saving scheme, you must save for a reason.
Purpose, yeah.
A purpose. If you do not save for a purpose, and you save because you have to save, then that means that saving scheme won't last, because anytime, any day, you may get excited and start buying things that are not on the program, because maybe you want to express someone was driving a Mercedes, and you say, that guy, I will buy. That means you're liquidating your investments without a purpose. Without a purpose.
Yeah.
From inception, you started saving without a purpose. But if you save with a purpose, that means it will be hard now to liquidate without a genuine reason.
Yeah.
Yes. So there are simple things. Someone may sell the bond because they want to sell it and invest in another bond. Yes. Assume maybe like right now, we are expecting a new bond which will be issued by Bank of Uganda around 8th of July. And someone may be like, for me to be holding an old bond, I think I should sell this old bond and wait for the new bond which will be issued by Bank of Uganda. And yeah, there are people who are like, for us, we don't go with old stock. We want to be moving with the new stock. Every year, Bank of Uganda issues a fresh bond. So for me to remain with an old bond, yes, it has a good coupon and stuff, no. Because economically, there are also risks involved. For example...
Yeah, I was going to ask you actually.
Yes.
Yeah.
For example, I'm going to use a simple example. 10 years ago, there was a car called Premio. Everyone, especially guys from up country, would be like, you need to buy a Premio, start with a Premio, because it has a resale value, it's all over in the market and stuff. But when the government of Uganda issued a directive to stop importing old cars that are below specific years, the car, because it's no longer being imported, the market dropped. So the car, by then, I think a good car would be around 18 million, 20. Right now, you can get it at 7. Why? One, it's no longer being imported. Get it? Secondly, people now resorted to newer cars. You get it?
Yeah.
So there is no way how you'll sit in a new model that is like 2021, and now
want to buy
another person will convince you that a 2007 is the best car. You get it? So it also applies to the bonds.
Yeah.
A bond which was issued 3 years ago, you get it? And now a new bond. People have moved on to a new bond. You get it? So the old bond, it's no longer the demand. It's now down. Like people are looking for it. And remember also the demand and supply aspect also apply almost in everything. Yes. Now this new bond, everyone is running for the new bond. Similar price to everything, like a new shoe.
So let me ask you.
A new car, yeah.
Me, I thought this is how it works. I thought that the older the bond, the better, because an old bond is closer to maturity date when you're supposed to, benefit from it.
No.
I thought that the older the bond, the better.
I am
not
only.
True.
It's okay. It's okay. The bond remains valid until maturity. But the issue is when you're selling it on secondary market. You get it? Remember, secondary market is between investor to investor. It's between me and you. You have information about a new bond. You'll go asking for the new bond. You'll not go for old things. Yes, so now just imagine 10 people asking the new bond. Francis have the old bond. So will I sell? Will I sell it? Even when I sell it, now the fact that no one is looking for the new bond, sorry, the old bond that I hold, that means you can buy even at a very bad price my old bond, because I am only forcing you an old bond which is not on the demand. Even when you approach a bank, they will be like, for us we can only buy at this level because they don't have a demand for that. But a new bond, they will know, they will buy it from you. In the evening they will sell it. Tomorrow they will sell it. So that's the aspect of new and old bond, especially in the secondary market. Because this time the negotiation is between me and you.
Yeah.
I hold a bond. I'm negotiating to you, who is a new buyer. You're not negotiating with the Bank of Uganda this time.
Yeah.
You're negotiating with me because it's my property.
So you will determine how much you want your bond.
Yes, I will determine. I will say I will need this, but it's regulated.
Yeah.
Yes.
Oh, it is.
Yes, it's regulated.
That's
If Bank of Uganda, because all these bonds that trade every day, Bank of Uganda will review and issue the average, what you call average yield at
maturity.
Yield to maturity, like
Yield
at what
to
levels all these bonds traded at. If they find, Francis, you've cheated Edina. Edina is the buyer, I'm the seller, and I've cheated you. Bank of Uganda will issue a directive to reverse that bond. Yes, back, and they refund back your money.
What?
Yes, because
That's nice.
It's way outside where the bond is supposed to be traded at.
So how will they find out the buyer is the one who petitioned?
Every bond is settled on a system called CSD. Yes, Central Securities Depository System. So the Financial Markets Department under Bank of Uganda reviews on every bond, every transaction that has happened on their system.
Damn.
Remember, at account opening, you submitted your details. So Bank of Uganda has your details. So they proceed and they start asking questions. How did this happen? What's the rationale? Then you reverse back the bond.
That's a very monitored system. I've
Yes,
loved it.
yes.
Not cheating each other. You're in the market
If I have the
bonds.
bond, I have it under Bank of Uganda system.
Yeah.
So Bank of Uganda will now, every day, there is a report published on Bank of Uganda website, which is like the market information. Everyone goes on to see where the securities have traded at. And if they find there is maybe something suspicious, be like, no, it's cheating an investor.
Wow.
Yes.
That's really nice. That is really nice.
Yeah.
So even when investment advisory firms are making money, that money is within the allowable.
Yes, it's within around. Okay, in trading we call them pips. So you must trade within 100. You can't. If you go past that gap, that means it looks a suspicious transaction, fraudulent, cheating. So Bank of Uganda. That's why Bank of Uganda is there to regulate the market. Yes, okay. They have full oversight, 100%, because they are the custodians of all bonds. Yeah. They are issued and they are domiciled under their custodial system.
I have another question, a follow-up question. Is it possible for you to have your bond you want to sell it in a secondary market and you fail to get buyers and then you could deal with your bond?
It's not possible.
And you said you have an old bond.
Government, Bank of Uganda, appoints what we call primary dealers. These primary dealers.
These are many big words. Eh? Okay.
Yes, primary dealers, we have 7 or 8 banks. Off my head are Standard Chartered Bank, ABSA, Centenary, Equity, Housing Finance, DFCU, and Stanbic.
Those are banks, okay.
Stanbic. I don't know if I've forgotten any, but those are the primary dealers appointed by Bank of Uganda. On appointment, whether they have the money or not, your settlement bank, let's say you opened your account through ABSA. You go through ABSA to sell your bond. It's mandatory.
They must buy it.
They must buy it, unless if you're selling it at a very bad rate, which a bank feels maybe they can't take it. Because remember, you're the owner of the bond. You can determine how much you want from your bond. Because those are called bid and offer. A bid, it's the amount a buyer is willing to pay for your bond. An offer, it's the amount the seller is willing to take for your bond. So you request for a bid from the bank, asking them for a bid and you want to sell your bond. Then you're free to contact other possible banks.
Okay, that's good.
But for other possible banks, it's not mandatory that they have to buy your bond.
Oh, it's only where your
settlement
account is.
bank, the settlement bank must. Otherwise, their license is at stake. Their primary dealership license is at stake.
That's nice.
If my bank is ABSA Bank, I call ABSA Bank Treasury. Tell them I have my bond. They do not have any reason for saying we do not want to buy a bond.
What if they don't have money? They can't afford the bond.
Then that means
they do not qualify to be a primary dealer?
Yeah.
Oh my God.
Yes. Because the criteria, there's a very big criteria for it. And every year, the license is reviewed. Is reviewed.
That is some deep stuff. Oh my God, I'm now feeling sorry for banks.
Yes.
Okay, but that's also reassuring.
So that's why you can, I say in 30 minutes you have your money on your account.
Yeah, I now understand.
Because you can't be having a bond and say, I failed to get buyers.
It's not possible.
Yes. That's why it's advisable to open your CSD account through a primary dealer. Those 7 banks I mentioned.
Wow. Okay, guys, we are now going to the next segment. But before we go into the next segment, I hope you have understood that if you're trying to sell your bond in the secondary market, there's no chance of your bond losing market or not getting clients, Bank of Uganda has you sorted, or your, how do they call it, the bank where your account is. Francis is here to give us the wisdom. It's your choice to pick up this wisdom.